Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hi, this is your one-stop destination where we get to crypto players and also representatives from the government so that we talk about cryptocurrency, but over coffee. The show is called Coffee and Crypto. I'm Arun Singh. A very warm welcome. We'll start the show with big stories of the week, but we have an MP as well joining us for a conversation. Who that is, you'll get to know. We'll begin with big stories of the week. Country's Computer Emergency Response Team, that's CERT-IN, which is overseen by the Ministry of Electronics and Information Technology, has issued a new set of rules stating that crypto exchanges must keep Know Your Customer information, that's KYC, and financial transactions of all their customers for 5 years. These steps are being taken towards compliance and user safety on crypto platforms, although some experts believe that this will increase cost for crypto platforms. Moving ahead, Ether was weeks away from their merge, which was going to be a transformative upgrade of its blockchain Ethereum to make it faster, cheaper, and less power hungry, but that has been delayed. One of the leading Ethereum software developers said it won't be in June, but likely in the few months after. No final date yet, but we are definitely in the final chapter of POW on Ethereum, and that is proof of work, which is not very energy efficient as compared to proof of stake. To the next story, veteran investor Warren Buffett told CNBC that he would not buy all of the world's Bitcoin for even $25. Because in his own words, what would I do with it? Because what would I do with it? And I'd have to sell it back to you one way or another. It isn't going to do anything, hinting at his distrust of Bitcoin, which he's not expressed for the first time. He's expressed such thoughts about Bitcoin and cryptocurrency in the past as well. Now, Facebook owner Meta Platforms Inc. gave an early glimpse of its first physical store, which features a floor-to-ceiling screen for showing off games on its virtual reality headsets and rooms for testing video calling devices. Just imagine that store. I mean, you don't have to imagine. You have pictures here which have been shared by Meta Inc. The store, set to open on May 9, is located at Meta's main campus in the Silicon Valley town. Parliamentary Standing Committee on Finance met crypto players in Bengaluru. One of the MPs, BJD's Amar Patnaik, tweeted about this, and today he is going to join us for a conversation. That is what I teased in the opening. For that, I'll go to our coffee walk. So we have with us BJD's Amar Patnaik, a member of Parliament. A very warm welcome, sir. Of course, the Parliamentary Standing Committee on Finance met private crypto players, and we really want to have some details from you. I know it's a confidential meeting, but what can you tell us about this meeting?
No, the Bangalore meeting was one of the field visits of the Standing Committee on Finance. And as in every field visit, it is an informal discussion. Nothing is recorded. So it's a free-willing exercise which which gives an opportunity to the people who are depositing before the committee to air their views completely freely. So in that direction, the meeting which was held recently, in fact yesterday, with the crypto players, all those people who are involved in this sector, besides other agencies like the rating agencies and the income tax department. The idea was to carry on the exercise of exploring this space as to where the finance committee could come in, also to hear their side of the story, why they think that this has tremendous opportunities for the country. But at the same time, as it was aired in the last meeting, these concerns which have been expressed by none less than the Honorable Prime Minister of India, as well as the Finance Minister of India, and many other players, including the IMF, were also discussed.
Right. And since you said you wanted to hear their part of the story, so is there anything they're relieved about, or let's say scared about? If you can broadly mention each of these things.
No, see, since this is a consultation which is confidential, so I can't be sharing everything that was discussed there. But
Sure.
what is there in the public space already, I think is well known to all of us. The concerns by the Government of India and many of us are actually relating to terror finance, money laundering, issues relating to how it will affect the money supply in the economy, because it's not regulated by the central bank. The explanation given by the crypto players is that there are mitigating measures which can actually reduce these risks. But unfortunately, I think these are not much in the public domain. I would take this opportunity to advise all those who are in the crypto space to do two things. Number one, to educate the common man, the policymakers, and I think the parliamentarians, the bureaucrats, everybody about the crypto ecosystem completely. And secondly, to also put it in very clear terms as to how they plan to address the risks that have been aired by Government of India and many other quarters. I think these are the two advices that I would like to give to the crypto players in the country.
Okay, for my next question, I'll pick cues from what you said. You used two words, terror funding and money laundering. Very recently on an international platform, Finance Minister Nirmala Sitharaman had also said that, these are the biggest risks of cryptocurrency. What do you have to say on that?
No, I think it's a very legitimate concern. And for a sovereign country, I think these are very legitimate concerns. It's not just India. I'm sure other countries in the world would also be facing or assessing similar risks if they allow the private crypto, transactions to happen in their countries.
Sure.
The point is that if such kind of risks are there and such kind of transactions are possible, the idea is whether those can be traced. Number one, whether the possibility of making these transactions more transparent, in which case, if there is a default or if there is a transgression from regulations, then they can be easily detected and taken to task, could be prosecuted. Now, these are the things which come up, and these are still not very clear. It's still in hazy space, I think, all over the world. It's not just in India. And therefore, there is probably, my personal idea is that there has to be a principle-based international order for understanding this, allowing crypto trade, and accounting for it. The second point is that they will also have to have some kind of self-regulation in which they put in those controls which would mitigate this risk to a large extent.
Right. Sir, you yourself are, Rajya Sabha MP. You're active in this space. You're also part of the Standing Committee on Finance. And in the past, several stakeholders have raised concern about the tall claims that were being made in some crypto ads. Has the situation gotten any better? Because government had also alerted these exchanges in the past. So what is your analysis?
There is a claim by most of these players now that they have regulated themselves and they are following the regulations as regards advertisements. But, since there are no standards, it's difficult to say whether what they are saying now is adequate not to lull, common investors who are probably not very aware of how the crypto operates into investing in it, and then maybe suffering lots of losses later. So I think when we talk about a regulation, that regulation should also include these aspects as well. I think if the players are doing self-regulation now, it's better. They're making their case stronger. But I think ultimately the standards have to be set by the government as and when they decide to bring in regulation.
Okay, so the new crypto tax regime is in action. There's a new rule also in place to tackle crypto tax evasion, which is asking exchanges to store customers' KYC for 5 years. We featured this in our big stories of the week as well. And you also mentioned regulation. So how far are we from regulation?
So I think by making this imposing this tax, I think the intention of the government is more towards bringing in a regulation instead of a complete ban. Having said so, I think even if there was a ban, the question is whether there is regulatory capacity on the part of RBI or SEBI to enforce such a ban. And even if you bring in the regulation in a more structured manner, the question would still remain whether the regulatory capacity is there. My feeling is that there is completely a regulatory vacuum, and regulatory vacuum not just in the absence of regulation, but regulatory capacity vacuum is. I think the regulators, in eventuality that the government decides to allow crypto assets to operate within or as a security, then the SEBI would be called in to regulate the entire transactions or entire market. So whether the SEBI is currently having that kind of a capacity, my feeling is no. So that's where I think even the crypto players should invest some of their time and energy to educate and build this capacity in the system so that they will be actually doing good to themselves. It will be a part of the effort to improve the trust factor between the regulator and the crypto players, between the citizen who is investing and the crypto players.
Okay, in this year's budget, Finance Minister had also talked about digital rupee, and of course we aim to have it by the end of this financial year. Several experts point out that probably it needs a lot of homework yet, and probably that'll be a long shot to expect to have it within this year. How do you see it? Do you see a digital rupee at the end of this financial year?
You see, several countries have already got a central bank digital currency, a fiat currency, and that's actually responding to the fact that to the fact of the growing market of private cryptocurrencies or digital currencies. So I think it's a good thing if the Reserve Bank of India and the Government of India come out with the CBDC as quickly as possible, because in my view, it would actually provide some kind of stability into the otherwise very unstable and very speculative private crypto market. And secondly, it would also increase the capacity of the regulator to regulate this entire market. So if the CBDC comes in, I think it would be like, a big regulatory sandbox where the regulator also understands what's happening and the private crypto players also understand the impact of such regulations, and in of course the space in which it is a fiat currency, it is controlled by the regulator. But that would give the signals as to what could go wrong. What are the risks? Are they overstated in some cases, understated in some cases? Are we seeing much more than what actually is there? So these are the things which will get clarified. So my view is that the Government of India and the Reserve Bank of India should come out with the CBDC as quickly as possible.
Sure. Thank you so very much for joining us for this conversation. And as I said in the opening, we have these conversations over a cup of coffee. I'm missing my coffee, so I'll take a quick break. But after the break, we explain what is day trading in the crypto world. We'll also have two guests join us who will answer all our questions. We'll understand day trading in detail. Don't go anywhere. Keep watching Coffee and Crypto. This is Coffee and Crypto, and now comes the explainer of the day, and that is, what is day trading? Well, it's a trading strategy that involves entering and exiting positions on the same trading day. The entire goal of day trading crypto is to profit off small moves in the market. It's also called intraday trading. The term comes from conventional stock market, where it opens only on business days. So day trading, or let's say day traders, don't leave positions open overnight. Hence the term, which is day trading. But why do it? What are the advantages? Well, cryptocurrencies can be volatile, so you can make profits with small moves. You don't see a high jump in traditional stock market in value within a single day, but such jumps are common in the cryptoverse. But then there are different crypto trading strategies, rather day trading strategies. I'll just discuss 3 and then we'll get on to our guests. So first is scalping. This day trading strategy's base lies in increased trading volume. Traders sometimes enter and exit within minutes, taking small gains along the way. And then comes our second day trading strategy, that is arbitrage. This means buying a coin on one platform and selling it on another, taking advantage of the price difference between the two platforms. But make sure you pick your coin and exchanges carefully in this. Third one is HFT, that is high frequency trading. It's a type of algorithmic trading strategy typically used by quantitative traders, that's also called quant traders. This involves developing algorithms and trading bots that can quickly enter and exit many positions over a short amount of time. And when we say short amount of time, that's milliseconds as well. And that is why you need bots and algorithms for this. But this is more complicated as compared to what it sounds like. High frequency trading includes a lot of backtesting, monitoring, tweaking the algorithm to adapt to the volatile market conditions. And now we'll open the discussion with our 2 guests that we have. First, we have Rohas Nagpal, Chief Blockchain Architect, Hi-Fi Blockchain. Abhishek Bhattacharya, Co-Founder at Brew Finance. A very warm welcome, gentlemen. I'll begin with asking you about note of caution that you want to give on day trading. Rohas?
Sure. So as you know, I've always been against the concept of day trading. See, while it is possible to make a lot of money because crypto is very volatile, it is actually easier to lose a huge amount of money.
True.
Now, when you talk about intraday trading, you are looking at graphs and charts and guessing. Please let me tell you, there is not too much of logic behind it. You are trying to guess what the large number of people are thinking, and accordingly you expect the market to move. Now, if you really must do it, I think the best strategy would be to go around news and sentiment analysis. So suppose, for example, recently Binance got legal permission in France. Now, we could expect a small rise in the price of their native token because a very positive news has come. So I would say, if you want to do it, news and sentiment analysis is probably one of the best techniques.
But Rohas, you're making it sound like a tukka, and people who do a lot of number crunching might get offended with this.
I'm sure they will be offended, but I still believe it's a lot of speculation.
Okay, Mr. Bhattacharya, what do you think? What is one note of caution that you would like to give the viewers?
Absolutely. So, in day trading, day trading is dangerous even, I believe, in the stock market, which is not that volatile, right? Also, it is not overnight. That's a caution that we have to really be aware of, that crypto is 24/7, 365, right? There's no, market off timings. So that's one piece of caution, that you do day trading. Yes, fine. If you do day trading, many people are pretty successful in that, but that's the definition of what's pretty. Right? Because you know that even in stock market, less than 1% profitable traders are there, as Zerodha says, right? So yeah, because we have to make sure that we are cautious, that we don't leave our positions overnight. Yes, we curtail it in day, and we make sure that also, as Rohas said, right, we can ride on the news, but we also know that, news, as opposed to popular view, we should sell on news, right, instead of buy, because I've lost a lot of money on news, right? So I can know that. So basically, that's one caution.
So you've tried and tested this?
Okay, kind of, yes, in both markets.
Any one strategy that you pick or prefer?
To be honest, I've tried a bit of algo trading, which is the one you explained at the end, the quant trading, because there you don't have to spend a lot of time yourself, your hours. Otherwise, in day trading, I think you cannot focus on your work. You have to constantly be on your computers, looking at the terminals. So a bit of algo trading, some trials, but again, not a lot of extent.
But I also said that it's a lot more complicated than what it really sounds like. Would you agree with that? And if yes, how?
Quite difficult. Yes, Arun, you're very right. I mean, why it's very complicated, because if you're just looking to have faith in someone else doing it for you, it's a different story. Then it's not complicated for you. You can sleep while the other person does that and takes a cut, right? Other than that, if you don't understand the coin, if you don't understand the volume mechanics, everything, it's not just difficult. You're not going to be able to do that, right? You're going to fail.
Rohas, any one strategy that you pick?
I would say copy trading is a good strategy. So what happens in that is different platforms allow you to copy or follow successful traders. So you can actually see their performance over the last several months or maybe over a year. And then you say, okay, this guy gets it right 90% of the time. Let me just copy him. So in that case, you don't have to do your own thinking. You're just copying a successful person's trade. I think that's a good way to go if you want to go down the path.
Right. And Rohas, who does it suit the best, day trading?
The exchanges, because they make a lot of the money because of the transaction fee they generate. So at the end of the day, like they say in gambling, the casino always wins. I would say in day trading, the exchange always wins.
Would you agree, Abhishek?
Absolutely. I mean, that's the perfect example.
Yeah, I caught that with your nod that you had to explain.
Exchange always win, right? You never win. I mean, you think you're winning, but tomorrow you're going to lose. Exchange is always going to win. Absolutely.
And in the end, Abhishek, things that, traders should keep in mind.
Yeah, absolutely. One thing is that don't play it on a hunch, right? That okay, I was good today, tomorrow I'm going to be better, or at least this good. You're going to fail, right? If you don't know the specifics of how to do trading any kind, even in stock market we've seen, if you don't know the patterns, what you have to see, if you don't know the averages and the moving average and everything that you want to see in your coin, you don't have a basket of coins that you're really good at, that anyone asks you a question and you're able to answer them in your sleep, I don't think that you should come into trading, do your day job, right? So, yeah.
Okay, well, that's all the time that we had for this segment. Thank you, gentlemen, for answering all our questions. With that, we've also come to an end of this show. I'm Arun Singh. It's goodbye from my side. Keep watching NDTV.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.